acknowledges Aboriginal and Torres Strait Islander peoples as the traditional custodians of lands, waterways and skies across Australia. From Mulgana country in the west to Bundjalung country in the east, from Lutruwita in the south to Saibai Island in the Torres Strait, this continent is home to hundreds of different nations whose knowledge has helped shape and evolve our understanding of the land and seas. Today, we pay respect to elders past and present and recognise the contribution of all First Nations peoples to the land we live, learn and play on. Have a deadly day.
The program for today is going to appear on your screen. We've got the panel session with our three speakers, which we'll move into shortly. We will have some time for your questions and comments on the issues that will be raised by Ian Summers, Tom Lund and Matt Press. And we will have a session with the chair of the Professional Standards Councils, John Vines, to close out the morning panel session and to launch a report that has been commissioned by the Professional Standards Councils. I'm sure you'll look forward to that with great interest. We'll then take a short break for everyone to be able to grab a cup of tea and come back to a workshop session with Adjunct Associate Professor Bernie Harrison, who is going to share with us some of the tools and some of the skills that have been developed in the health professions for continuous quality improvement, how to identify problems, develop solutions and measure the improvements in professional standards that they can deliver before we wind up for the morning at about 1:15 this afternoon. So without further ado, we're going to move into the panel session. I'm delighted that we've been joined by Ian Summers. Ian is a long-standing member of the Professional Standards Councils, having joined in 2006. Ian has the chair of the Finance, Audit and Risk Management Committees of the councils. He is a chartered accountant and governance consultant, and I'm very pleased to hand the screen to Ian to speak with you about the Professional Standards Council's role in risk management. Thank you, Ian.
Thank you, Roxanne, and good morning all. And let me add my welcome to you all, and thank you for joining our forum today. So today's forum theme explores how improvements in risk management practices by professions should better protect consumers from harms arising from negligent services by professionals, and how this may impact on professional indemnity insurance availability and pricing. So the role of risk management in protecting consumers of professional services is a regular theme of these forums. But let me set out again the purpose of professional standard schemes in the context of risk management. So we've got a slide there showing you that the professional standard schemes are instruments that give legal limitation to liability of association members for actions against negligence. So those legal instruments, though, commit occupational associations to continuously, and we will stress continuously as we work our way through the session, improve the professional standards of members in protecting consumers of services. And indeed, to earn this limited liability, the associations, through their schemes, need to show how risks of unprofessional conduct are identified and mitigated so that the likelihood of harms to consumers is reduced. So my session will mainly cover the risk management relationship between associations and the councils. And to do that, I'll be referring to how associations provide a risk management commitment to the councils as to what they will be doing as regulators of their members. I'll be looking at how the associations report their performance to the councils. We'll be looking at very importantly, the partnership between the associations as regulators and what we call the councils as meta-regulators. And I'll have a light look at the impact of risk management improvements on professional indemnity insurance pricing and availability. So that'll be the format of my program or my presentation today. Let's just move on to that topic of the relationship between the associations and the councils. So the approval of a scheme creates a relationship between the professional standards councils and the occupational associations, in which both parties have obligations to oversee adherence to the scheme requirements. And can I just say that because there are 8 state and territory councils with the same membership and who hold joint meetings, we refer to councils in the plural. And I will also highlight that we currently have 18 schemes. So the 18 schemes are prepared by their associations. Each scheme is prepared by its association and is the regulatory framework that will be used to monitor the performance of their members. So that's where the schemes are what is the regulatory touch point for associations. And as you can see from that little graphic there, it's the associations are the first point of contact with the members. The next inner circle where the professional standards councils reside provides 2 opportunities to the councils. The first one is that the councils can provide assistance to the associations in the way that they compile their scheme applications and how they identify their risks and their risk management techniques. But it also is the point where the associations report back to the councils and allow the councils to do their meta-regulatory process, which is to see how the schemes are achieving the risk management strategies and the risk management outcomes that are the commitment that's put into the scheme application process. So the first layer of the council's activity there is to be the meta-regulator, how well are the schemes performing, but in so doing that, we can also then continue to provide that assistance back into the associations to give them advice about how well their schemes are performing and how well their risk management programs are performing to achieve the outcomes that are expected. So there's 2 layers of regulation going on here, the regulatory role through the schemes and the meta-regulatory role through the professional standards councils. But very importantly, we need to work together if we're looking at that goal of improving professional standards. All right, so let's just move on to getting a common understanding of what we mean by risk management. And so what we've got on the screen there is what I'm describing as the essential elements of risk management. And I'll say the practice of risk management is pretty well established and involves some well-known steps. So working across on the left there, in devising a risk management plan, step 1 is to assess the nature and extent of the risks facing the association's members' achievement of their objectives. Now, through the lens of the professional standard schemes, the business objective for which there are risks is an objective that's described as minimizing consumer harms. Now, the flip side of minimizing consumer harms is maximizing consumer satisfaction. So either of those descriptions, minimizing harms or maximizing satisfaction, should well be the objectives that the professional standard schemes are focused on. So as we move away across the standard risk management steps, we'll see that by now associations should be involved with identifying their risk appetite for minimizing consumer harms, what extent of risk is acceptable to bear for specific risk categories, and moving across into the standard practice there of identifying the likelihood and consequence of those risks occurring with reference to a matrix of descriptions of likelihood and consequence, moving away across to saying, well, what controls have we already got in place to mitigate those risks of consumer harms? And we'll look at controls shortly in another slide. If we're not mitigating those risks down to a tolerable risk appetite level, what else should we be doing to get us there? And so that format of risk management, or that structure of risk management, is what we're expecting to see associations including in their applications for a scheme. And I just then take us though back to this concept of the objective of the risk management. And it's if it's to minimize consumer harms or to maximize consumer satisfaction, what do we mean by consumer harms? So I will say in the current application framework, the new application framework that you will be engaging with in future, there is quite a good section there describing what we mean by consumer harms. But here's a go at a definition. That is that it is about adverse outcomes experienced by consumers of services or members of an occupational association, which leads to financial loss or impairment of well-being. So we can foresee the financial loss could well be something that becomes a claim, an action for professional negligence. But impairment of well-being could be things like missed deadlines or loss of data or poor communication. So they're the sort of things that will provide duress and stress to consumers and may well end up being the subject of a complaint. So the level of consumer harms can be measured by what we're seeing in both complaints and claims against professionals. So if we recognize that that's the sort of what we'll be heading to as one of those measures, let's have a look at what we will be defining as controls in the risk management plan. So we worked our way across and said, well, what are the risks and what are the controls? And so these are the risk management controls, the techniques that we would be expecting to see, the councils would be expecting to see adopted by associations in their schemes. Now, none of these will be a surprise. We work our way through that we expect to see that there are evidence of achievement of occupational standards to allow entry into an association. And once you're in the door of the association, that you'll be exposed to codes of ethics and professional conduct. Again, once you're in the association, that you'll be expected to not only have entry-level skills, but you'll also be continuing to improve your skills through professional development activities. And I might say that our recent forums have dealt with both the codes of ethics and compulsory professional development. So we've got some good content out there that you can review again if you'd like to in relation to these through the lens of being risk management control mechanisms. Complaint systems and how complaints are managed and responded to, and the time frame of responding to would be those policies are very much part of your risk management controls, your discipline systems, the policies around how discipline is enacted to deal with complaints and proven complaints. Peer review processes should be sitting in your risk management plans. Now, peer review processes once upon a time used to be the technical aspects of how you perform your work, but more recently it's also about emotional well-being counselling opportunities, and emotional well-being often from practitioners can lead to root causes for complaints. So we'll be looking to see how peer review and professional support programs exist within your risk management activities. And that final point is about evidencing to a risk awareness culture that can identify, assess, and manage emerging risks. We'll talk a little bit more about emerging risks shortly, but it's important that we see that there is an active engagement by associations and through their schemes with dealing with emerging risks. All right, so look, we'll move through then to the relationship between the associations and the councils and how associations embed those risk management controls and the risk management plan into a commitment to the councils through their scheme applications. So to win that liability limitation for their members, associations must provide a description to the councils of the risk management processes that they, as the regulator of their members, require. So the councils have recently revised, as I say, that scheme application framework and have set out what we hope are clearer expectations of how these risk management techniques need to be identified through a scheme application. This will summarise what we expect to see in a scheme application. So we need to see the risk assessments following that format that I just outlined, and the risk mitigation procedures to minimise these consumer harms, those controls and further risk mitigations that we've just outlined. And also in that scheme application is how the associations through their schemes will be developing their own regulatory governance capacity. So how they will be governing the activities of their members and achieving their risk management expectations. So as we work our way through to those council expectations, so what's set up there in those council expectations is what you will be doing as a regulator, but also what the councils will be provided with as what you are doing. So this is the easy part. In effect, we said what we are going to do, but the councils expect to see another little piece, which is not only what are you going to do, but how are you going to assess as a regulator whether or not these actions are effective. So here is a big advertisement for using and gathering data and showing us in your scheme applications how you will gather data to provide some trends over time in those controls areas, those risk management technique areas that we've just identified. So in a quantitative sense, how are you going to measure your CPD activity and attendance, your complaints, your professional indemnity claims, what sort of level of discipline activities are being undertaken? If I can just say, in a perfect world, we would like to see that CPT activity was increasing or being maintained, and as a result, complaints were reducing, claims were reducing, and discipline activities were reducing. So what we'd be looking for in the scheme application is how would you be expecting to go about doing that analysis work and providing that level of information and measurement of effectiveness. So the application will be looking at how you're going to provide that sort of information. And also there'll be qualitative aspects. For example, the member surveys could be things like how members are reporting back against about professional indemnity insurance premium experiences. That could also be used to identify emerging risks that members are identifying out there that can be used to embed into the risk management processes. And also, we'll be looking to see how associations are managing their governance of achievement of the scheme application. So is there a compliance plan for achieving the scheme obligations? I will say that associations usually have already pretty well established data collection systems from which they extract information, particularly about CPD activities, complaints, and disclose those in their annual reports. Often that's a year-on-year comparison, but wouldn't it be great if we could string about 5 years of that together and get a trend analysis about how during a 5-year life of a scheme, what differences are all those risk management techniques making to the impact on complaints and claims and those other metrics around whether or not consumer harms are actually emerging. As part of our assistance to associations, we have got a guidance note on the use of data, and I'll certainly direct your attention to that. So as you're building your scheme application or looking at emerging risk mitigations, have a look at our guidance on the use of data. So a great example of how we are providing some feedback and assistance to associations. We'll move on then to schemes and associations reporting their performance of their risk management systems. This is actually a clip from, as we can see, the New South Wales Professional Standards Act. If I can just take you to that second dot point in that legislation, and way back in 1994, the Parliament of New South Wales, and this was adopted by all the other jurisdictions, said that an occupational association must provide annual report to the council on the implementation and monitoring of their risk management strategies, the effect of those strategies, and changes made or proposed to be made to them. So this is a pretty deep dive that the legislature required even way back 28 years ago, expecting that this sort of information would be what the association through its schemes as a regulator draws this information from its members. And so this information is then provided through to the councils. And as you can see from the third dot point, the information provided by the associations is then required to be incorporated into the council's annual report in such a way as the council determines. So let's just have a look at perhaps how we do that. So this is examples drawn from our annual report for 2021. This is drawing from the consolidated information from the 18 schemes that we've got. And so here's in the top section, we said, well, let's have a look at a trend around the impact of claims. Let's have a look at where claims exceed 50% of the monetary ceiling. For example, if the monetary ceiling was $2 million, what amount of claims are there over the $1 million? Bearing in mind, this is consolidated across all schemes. So in 2019, we saw 30 claims in excess of 50% of the monetary ceiling. By 2020, that had dropped to 13. The chart below is showing us the quality of scheme analysis. And it's showing that associations that implement root cause analysis grew from 51% to 71%, aggregated across all sectors. This one is on the left-hand scale. The vertical scale is showing us complaints, claims, and claims. And you can see on the horizontal scale that what we're dealing with is any of those lines heading off to the left-hand side is where we've got a reduction in the number of claims and complaints. And then on the right-hand side, we've got an increase in claims and complaints against those occupational sections. So we can see that these charts in combination are suggesting that consumer harms are indeed reducing. So this is how we're using at a consolidated level the performance information being sent to us from schemes. But we also provide individual commentary back to each individual scheme. So that's again an area where we can provide that assistance. We also provide some aggregated commentary. And here we'll see from our annual report where we identify common areas for improvement. So we've also in the annual report provide areas where things are going very well, but just for illustrating here, 3 common areas for improvement. So we're identifying there could be better reflection back to consumers if there is some changes in the way that the process of CAPS is working. We're actually encouraging better improvement in use of root cause analysis. And under that scheme monitoring improvements, we're actually still seeing scope for improvement in how data is gathered and analysed by associations. So associations will be getting that sort of feedback from the councils. We use the annual reporting more widely as well. It gives us opportunities to share leading practices across professions. It identifies trends and issues across occupational sectors, prioritise areas for advice. It gives us content for things like these forums. And importantly, it also allows us to do that component of reporting back through our annual report through to the ministers about our meta-regulatory assessment of how well the associations through their schemes are monitoring their own members' risk management. If I can just briefly deal with emerging risks, because it is an important aspect of what we're wanting to see coming through association annual reporting. So emerging risks can be identified internally, particularly through your scheme governance processes. You may well have identified risks coming out of skill shortages in your professions, or staff well-being issues, working from home issues, how are they affecting consumer services, cyber intrusion. So there would be things sitting in your board governance documentation that would be giving you aspects of risk that are emerging, and no doubt some mitigations, but also you can look externally as well as to the outside world. For example, there's a big focus currently on ESG reporting, environmental social governance reporting. So what are those reporting requirements doing in raising new expectations that can be on your members for the performance of their professional services? I'll say also that at a macro level, later this morning, Matt Press will outline how, in response to emerging levels of consumer harms in the building sector, professional standard schemes have been identified as a way to respond by associations in the built environment to build consumer confidence and reduce consumer harm. So emerging risks are out there, and professional standard schemes can respond to those. I just then quickly, if I can, identify that in relation to professional indemnity, you'd be aware that the way this is supposed to work is that associations provide the information about risk management in their applications. The councils approve the scheme applications with liability limits. Members then purchase PI to those liability limits, and the consumers can then be confident that there will be funds available to compensate them for the harms incurred. And so what we find, though, in our annual reporting is that, and feedback from the members, is that in fact professional indemnity costs, despite the fact that we've had trends towards lower numbers and amounts of complaints and claims and better analysis of causes, PI insurance premiums are actually rising. I won't delve too much into that, but I know there'll need to be more analysis of this, and some of that is going to be discussed in that report that Roxanne identified will be launched by Chair John Vines later this morning. And Tom Lund will speak after me now about the Insurance Council's review of why PI indemnity premiums may well be increasing. So look, just to close out, this is the one that I want you to have as the takeaway for the session. What we want you to encourage you to do is collect and analyze data, use that analysis of data to open a dialogue with your insurers about how this could be impacting on your premiums. Continue to seek and use council's expertise, and also use this experience to collaborate with other associations and regulators. We also have a little advertisement about collecting and analysing data. There is this opportunity that's in the legislation to allow you to establish your own, and indeed the legislature is encouraging you to establish your own committee with expert input to monitor and analyse claims, and indeed monitor and analyse complaints as well. So if I can just take us through to that last recap. So what I've been talking about is the risk management commitment through the scheme application, the performance that you're reporting to us through your annual reporting process, how we use those in combination to work in partnership to continue the journey of improving professional standards, and how we may be able to use the performance improvements to impact on professional indemnity insurance premiums. So thank you, folks. Happy to take some questions in the Q&A, and I'll pass back to Roxanne.
Thank you, Ian, and thank you especially for that lovely commentary in the opening of your presentation about the balance between minimising harms and maximising satisfaction. I think that's a very pertinent point around the interests of professions being able to ensure that the clients of professionals receive quality services that satisfy their needs. So a very useful point. We're now going to go to Tom Lund. Tom is Senior Policy Manager at the Insurance Council of Australia, joining the Insurance Council of Australia after a career in private practice focused on public liability and professional indemnity insurance. And Tom is leading the work at the Insurance Council in looking at the availability and affordability of commercial lines of insurance, and is going to share with us some insights from the Insurance Council's work with the insurance sector. And Tom, I'll invite you to turn your video on, and I'll hand over to you now.
Thanks, Roxanne. Yeah, so today, as Roxanne mentioned, I've, over the last couple of months, been predominantly working on a project that the ICA is looking at in relation to insurance affordability and availability of commercial lines insurance. Just a quick overview on the slide there of what I'm going to talk about today. I'll go through the background to the Independent Strategic Review of Commercial Insurance, which the ICA commissioned, which was written and undertaken by John Trowbridge from Finity Consulting. I have a bit of an overview of some of the options and recommendations in that report and the focus of the report. Talk about the ICA Business Advisory Council, which was established following the report, and the work they're doing and the focus areas. The work to date they've done, which has predominantly been looking at liability insurance, but we'll be looking at PI going forward. And then a quick comment on data and the consumer data right. So just a bit of background on the independent review of commercial insurance and why the ICA commissioned that review. The ICA had done a lot of work in relation to retail insurance for mums and dads, home and contents and so forth, house insurance, and looking to examine ways of making it more affordable and reduce underinsurance in that retail sector. But we hadn't done that much in relation to commercial insurance. And with the emergence of the hard insurance market, it became more and more apparent that there were sectors that were really having a lot of difficulty getting affordable insurance. And those availability problems sort of outlined on the slide there, the key ones being in liability insurance, the amusement, leisure and caravan park sector, physical and sexual abuse insurance coverage of liability insurance coverage, particularly in the out-of-home care sector. And then of course in public liability, building and construction, some of the challenges there are fairly well known, and also directors and officers where there's been some big increases in insurance premiums in the last few years, although that has stabilised a little bit now. That's a copy of the report there, the cover. So the background of this report was to look at options out there and potential solutions. It was commissioned in November 2020. There was a consultation process and it was publicly released I think in around September last year, and it has a number of recommendations and options for assisting in improving affordability in some of these SME insurance sectors and markets. So just going through a couple of the options and recommendations that were identified in the Commercial Lines John Trowbridge report. This isn't all of them, but some of the key ones that stood out. Standardised documentation was identified as a way in which small business would be able to navigate the insurance environment, and also for brokers to examine what was actually out there in terms of what they could provide their customers. Simplifying that in terms of documentation, definitions and so forth was seen as advantageous. However, it did have a big caveat that obviously there's only an extent you can go to do that. Otherwise, you can stifle innovation and competition and variation of what kind of different products are out there to suit different businesses. And the next 2 points there, advice and education on risk mitigation, that was identified as something that the industry and insurers through the ICA could do to and provide the information of what exactly small businesses could do who were having difficulty getting affordable insurance, what they could do to put themselves in a better position. And then going forward to point 3 there, once they're having that information, being able to implement it through risk management, risk mitigation, or any other measures that would see them being a more attractive insurance risk and increase the likelihood of them getting cheaper insurance and getting insurance long-term going forward. So previously they were the awareness options. There was also options available to the insurance industry in terms of what the different ways of providing products. So when I talk about insurance industry, we're talking about not just insurers, but underwriting agencies and brokers. One thing identified in the Trowbridge report was there was a lack of underwriting consortia in Australia, the Lloyd's style of placing risks. People will probably be aware that Lloyd's use syndicates whereby the risk is spread across different insurers. And that is one way of increasing the availability of insurance when they've got trickier risks, which one individual insurer would be unlikely to want to take on themselves. The use of more underwriting agencies with specialist capabilities, that became very apparent in the work we've done since, having those agents out there that know which insurers are able to place risks and what operators and small businesses need to do to get insurance is really helpful and a way of improving what's out there for small business in terms of the availability of insurance. Group schemes with insurers, captives and discretionary mutual funds as an alternative to the standard going to an individual insurer in the market. You may be aware that the Australian Small Business and Family Enterprise Ombudsman recently released a report in relation to a DMF for the amusement sector, which came out and identified that that was an option for them, subject to a certain number of caveats in there. The next point there, industry associations and accreditation and standards. Clearly, as Ian sort of mentioned, any standards or improvements in performance that reduce the likelihood of there being claims and complaints is a good thing and is a form of mitigation. Broker specialisation, a bit like underwriting agencies, play an important role. more use of them by businesses who are struggling to get insurance will hopefully open up and increase the likelihood they will get insurance and cheaper insurance, particularly the importance of going to the right broker who specialise in the area of insurance that a customer's trying to find. And the last point there, supporting the public interest and the industry's social licence. This was mentioned in the report, the idea that notwithstanding that a risk or a certain industry may be unattractive to insure, individuals may be unattractive financially for an insurer to insure because on the risk profile they present, that there may be a role for the industry or different insurers to come together and agree to provide insurance on the basis it does support the public interest, even if it doesn't look very financially attractive on paper. And finally, in terms of the options in that paper, there was the government-related options. Some of them, as you probably have heard before, reduction in taxes and charges on insurance products, which add significantly to the cost of insurance and have been identified as being inefficient by the Productivity Commission. Removal of them would be an easy way to reduce the cost of insurance, and it will also increase the uptake of insurance. And more generally, collaboration with governments to reduce regulatory barriers, which I'll talk about a bit more, but there are sometimes barriers out there presented by government, often unintended, but do actually increase the cost of insurance. An example I've got there in brackets is mandatory insurance coverage amounts, which may be over and above what is necessary for the work being performed. And the last one there was just in relation to when government should get involved and intervene. That report identified that there needs to be a very strict criteria to where government would intervene. And generally, unless there is, pure and true market failure, the case for that is probably quite low. So that's just a bit of a diagram there in relation to one of the key recommendations, that there be better collaboration between insurers and insurance buyers, meaning businesses. And one thing that, so the focus there, you can see that little diagram, that there be a forum by which issues can be brought to insurers' attention through the ICA and through the use of industry bodies, which would improve the understanding by insureds of what needs to be done and why they're having difficulty getting insurance. Provides a mechanism that feedback can be provided by insurers to industry bodies about, what is driving the problem if there is a difficulty out there. And often that could be the need to bring more specific information back to industry bodies and businesses about what risk management areas need to be focused on to improve the situation in terms of the long-term availability of insurance for certain sectors. Okay, so in light of the Trowbridge report, the ICA created the Business Advisory Council, which is a forum, you can see there, is chaired by Dallas Booth, the former CEO of NEBA, the Insurance Brokers Association. And they said it brings together a number of industry bodies and government bodies. And it's basically created to be a forum for allowing for this greater collaboration and dialogue between business, small business, government, and insurers. And essentially, the role of this is to help examine and hopefully identify solutions to these affordability issues that emerge as they're popping up, which are becoming more and more. The way I like to look at it is, instead of a business or a small business not being unable to get insurance and not understanding why they're not getting insurance or not understanding why their insurance is so expensive, this allows a dialogue there to move forward and assist those businesses and get solutions. That committee list there it's not, they're the people on the committee, but we do open up that to other groups if the topic we're discussing at a meeting would warrant further groups being involved. So in terms of the Advisory Council and the work we've done to date, predominantly to date, we had the first meeting late last year, but the focus has been on public liability insurance. And as those sectors I mentioned earlier, caravan parks, leisure and amusement, out-of-home care. Going forward, there will be a big focus on the professional indemnity issues outlined in the slide there in relation to engineers, building professionals, financial planners and D&O. And there may be other industries added to that as we go. So this is just a bit of a rundown of what we've done to date and the experience to date. So clearly, a lot of these affordability issues have increased as a result of a hardening insurance market. But going forward, BAC has provided that forum we talked about in relation to the recommendation of the Trowbridge report, that there needs to be greater collaboration. So it's something that the ICA hasn't done specifically like this before, but I think it's been a really good step in the right direction to address these affordability issues. Whereas in the past, there was sort of an end point where if a business couldn't get insurance, they kind of felt a bit stuck, or it was too expensive, they felt stuck and weren't getting the information they needed to improve their situation. To date, what we've discussed as part of this role has been just how key the role of the specialist broker and underwriting agency is in facilitating insurance, particularly with those trickier, harder to place higher risk businesses. Their role has really been extremely important. It's been really highlighted to me their importance of this, and they've also got an extremely important role to play in digging down and providing that information to insurers and to the likes of the ISA, exactly what is driving why an individual business will have trouble getting insurance in the nature of their business and how it's set up. They will be playing a key role going forward in the work we're doing to find solutions. It's been identified that there are not enough local insurers in some of these niche markets. There's been a high reliance on overseas insurers, and with that hardening of that insurance market and some of these insurers leaving the Australian market, it has created a bit of a perfect storm. And so ideally going forward, having more insurance available here, whether it's individual insurers or consortia, is one way that the problems could be addressed. We've discovered through the BAC process and the work we've done that insurance requirements of governments can present some challenges, particularly in relation to minimum amounts of coverage and mandatory insurance coverage. So that's something to be sort of the ICA is aware of and engaging with government with. Where there is reforms, they should be approached with the cost of insurance and insurance availability going forward in mind. The obvious one that probably sticks out to date, where the actions of regulators and legislative change may have impacted, is in the area of physical and sexual abuse. Following the Institutional Child Abuse Royal Commission, there was some tort reform, and I must say well-intentioned tort reform. However, some of those changes, for example, removal of limitation periods and reverse onus of proofs and so forth, particularly limitation period changes, have essentially hit that out-of-home care market quite hard, which was already a very high underwriting risk. And as a result, that area of insurance has dried up and government has actually had to step in to provide a interim insurance arrangement. A lot of state governments have done that. The other aspect is they actually mandated insurance. By mandating it, mandating insurance, but also accompanied by these other changes, the insurance actually wasn't there at the end of the day for these out-of-home care operators. So it's sort of an example of always having the cost of insurance and availability in the back of their mind when there is legislative change being undertaken. Another aspect we've identified is just how important it is that insurers communicate and improve their communication with businesses through industry bodies and so forth about what businesses need to do to get insurance. And that's what this form of communication is allowing for. Insurers haven't done a great job of that at times, and it does create that area of confusion among small businesses. It's like, oh, what do I have to do to get insurance? Why aren't I getting it? And what we're doing going forward is working with the industry bodies, the underwriting agencies, and the brokers and insurers to put together an education piece and a communication piece, particularly for those liability area sectors that are struggling to get insurance, so they can really understand what they have to implement to put them in the best place going forward to get insurance. So that's one area where the ISA will play a role going forward. The point there, organisations must factor insurance requirements into their business models. It might sound obvious, but particularly with some of these sectors, the caravan parts sector and so forth, where there has been a significant increase in insurance and there has been a change in the business models some caravan parks are now using in terms of, more equipment and so forth, that increases the underwriting risk. It's been identified by the insurers and also by the industry bodies themselves that not all operators have done that, and they need to start doing that going forward so they understand how much they need to charge and what the expectations are of their cost of insurance going forward. And lastly, risk mitigation and de-risking. That really is fundamental to addressing this whole issue of insurance availability. That came through very clearly in the work we've done in terms of workshops we've had in relation to liability insurance problems that are currently in the market. You really need to de-risk. Insurers, operators and businesses have to do this, and the insurance industry has a role in playing of helping them explain and educate them what they need to do, because ultimately that's exactly what will reduce the cost of insurance. And without that, it's going to be very challenging going forward for businesses who are currently paying a lot for their insurance or can't get insurance. And just on that, just in the discussion we've had about industry bodies, professional standards associations, one thing that has come out in my consultation with our members is the de-risking and risk mitigation really needs to be borne out in the data that insurers have. So increasing standards, professional standards is 100% supported, but what insurers at the end of the day really look at is what the data says in terms of the claims experience, the quantum of the claims, how many are coming through, and that is really ultimately what will drive down the cost of insurance. And lastly, just in terms of an area where insurers could probably do better at times has been just in relation to insurance pricing, pricing insurance properly. So pricing the risk properly to avoid sudden premium increases. There's been a number of examples where insurers have entered markets, priced too low, underpriced competitors, and then realised a few years later, hang on, we're losing a lot of money here, and suddenly had to increase premiums a lot. That's not a good outcome for business. It's not a good outcome from insurers. It makes it difficult for businesses to plan ahead. So there is lessons to be learnt from the industry about making sure risk is priced properly to avoid sudden premium increase to address the incorrect underwriting in the first place. So just following on from Ian's presentation, I thought it might be good to also highlight some of the external factors that are at play that can influence the cost of insurance that sometimes are out of the hands of businesses, professional industries, and also insurers. Things like reinsurance costs and requirements, they are going up in the area of liability insurance, particularly that physical and sexual abuse coverage. The reinsurance costs and requirements there are a lot higher than they used to be, and that is another factor that's influenced why that part of the market has really been smashed in terms of availability. Natural disasters and climate change, we all know that what's that's going to do going forward with insurance. That's why mitigation is important on that front. Class action regimes, this was identified as a reason why liability and PI insurance is often more expensive in Australia than other areas. We have a pretty favourable class action regime compared to other countries. Liability settings, as I mentioned, tweaks to them can influence the risk rating and the underwriting risk for insurers. Regulatory settings, important as well, and new entrants, insurers underpricing the price of risk, again, that can have some impact going forward. So just in terms of going forward and the discussion on data, as I mentioned, it's all about data. For insurers, it is all about data and what the claims experience is. This is going to become more and more of a focus going forward for insurers. Insurers probably be aware they have had a lot of legacy systems, and to some extent their ability to evaluate data, they've had tons of data, but they've probably been able to evaluate it as much as they could. But that will start changing soon. Insurtechs are developing a lot better ways of helping insurers analyse their data, and there is more data out there, so underwriting is becoming more granular, which is a challenge. Which will be a challenge for the industry to keep making sure that there is available insurance to everyone when they can just dive so deep into what the data says, and a challenge for business going forward. So again, with this more granular underwriting, the importance of risk mitigation and planning becomes even more important. The consumer data right is coming to insurance in 2024. It's already in open banking. It's in the banking industry. Again, that is going to focus insurers' attention a lot more on how they can use data better to assist their customers. It'll also bring a focus on how they can use it to better their businesses as well. And finally, I just thought I might just finish just in relation to a reference to regulatory change and regulatory regime, noting that Matt's coming on talking about the changes to the building industry, which are very welcome from the insurance sector's perspective. The real importance of getting, if the industry and financial services has gone through a huge amount of regulatory change in the last year or so, but really the importance of getting the right balance with regulatory settings and have settings that create good outcomes for consumers and business that enhance, not hinder, insurance availability and affordability. And one thing, whenever we're dealing with a regulator or a government, any proposal to reform regulatory settings, even when we're talking about proposals to reform settings to improve standards and so forth, like that's been happening in the building industry, it's really important that regulators have an appreciation to make sure that what they do doesn't hinder or make it more difficult for operators and businesses out there to get insurance. Because the last thing you want is to have a great, nice, clean industry, but suddenly the engineers, the operators out there can't get insurance anymore because the settings are such that insurers can't provide insurance.
Tom, thank you so much for shining a light on what can often be a mystery to many insureds in terms of the thinking of the insurance sector. I'm sure associations' ears will have pricked up to that very significant opportunity that you've outlined there for closer relationships and collaboration between insureds and insurers. And I saw Consult Australia, who's one of your participants on the Business Advisory Council, commended that that forum as a way of being able to share perspectives and data and to dive deep into what those solutions might be. So thank you for your presentation, and I know Matt will pick up on some of those themes. Matt Press is going to present for us next. Matt is the Director at the Office of the New South Wales Building Commissioner and has been leading a really significant reform agenda for the residential building sector in New South Wales, and some of the initiatives that we've been watching closely out of the Building Commissioner's office are going to be very applicable, I think, across the broad range of occupational and professional bodies within our national system for professional standards regulation. And Matt has the benefit of having been on the business side, having delivered his own affordable housing business for many years and worked in a number of sectors often regulated by government and by professional bodies. So on that note, Matt, I'll invite you to take the screen.
Thanks very much, Roxanne, and thank you for Tom and Ian really laying a strong platform for my discussion. I thought I'd open by just saying it's great to see so many representatives from associations from across the built environment. You can see we've got fire protection, engineers, strata managers, certifiers, architects. I think that's fantastic and just shows how invested stakeholders in the building and construction sector are with getting on board with becoming more professional and doing more in this space. So thank you for making the time today. So my presentation, I'd like to talk to you about my views on what a strong industry association looks like. I do bring a building lens to that, but I think many of the things that we're pursuing in building and construction apply very much equally across all of the other sectors. The principles, the concepts are very much transferable. So if we step back and think for a second, what does a strong industry association look like? And guess who came to mind for me, because I've just got young kids and so they've invested in their first games, which was Guess Who here. And I think if you asked people on the street, what do they think a strong industry association looks like? They'd probably mention different things to industry associations themselves. I think the key thing is actually they focus on the customer, because the person at the end of the supply chain is really the why, regardless of whatever service we're providing, regardless whether we're a certifier, an architect, an engineer, a strata manager. We have an industry, we have a profession to provide a product, a service, and so the experience of that customer is vital. So as a slight challenge to, I think, what Ian and Tom were putting up there about balance, I'd say if we don't at least start with that customer first, we're already going down the wrong path. I'd encourage you all to reflect on where the customer is mentioned in your own charters and constitutions. It's amazing how many constitutions mention that they're there for the industry, the sector, they're there to advocate, but the customer experience is really lacking. And I think that's very important, because if we want to be serious about making it a profession that people are going to want to work in, provide a service, we've got to be very clear on that why. Be very clear, if we're not producing a service that makes our customers happy, we won't have customers. And if customers leave our service, then that shrinks the size of the market. And that's a problem we've very much seen in building construction. We have customers that aren't confident to purchase off the plan. We just completed some research and we asked over 1,000 people across New South Wales how confident they were to purchase an apartment off the plan. 38% confident. So if we don't do things that focus on the customer, then we're already focusing on the wrong ball. So how do we do that? Well, I think there's some learnings of the building construction transformation that we've had in New South Wales. So I think the first point is that we've got to have industry associations, just like regulators, that are proactive. They can't be passive bystanders waiting for complaints or issues to arise. They've got to be out there in the field, in the business environment, getting ahead of problems before they arise. That's the most efficient point in which to intervene. It also means that problems don't escalate and become worse. So that's been a big focus of our work with New South Wales Fair Trading and Safe Work. Instead of responding to complaints in building defects 3, 4, 5 and 6 years after that building is completed, to really get ahead of the curve and have proactive audits during construction right back now to the design stage, so that we can make sure we spot issues early and work with the industry to course correct, so that we don't end up in a significant issue for customers, nor a significant compliance issue for industry. The second feature of the strategy is it's got to be multidimensional. We can't just focus on one or two things because there really are no silver bullets. So for our strategy, we've had 6 pillars, which many of you might be familiar with, cutting across legislation, ratings, education, contracts, digital systems and research. And I think all of those themes apply equally in the context of industry associations. For legislation, you have your rules in your constitution and your code of conduct. Education, we have the delivery of continuing professional development. In contracts, you have the standard contracts and the templates that you issue to members to help manage their risks and produce something which is beneficial to them, but also reasonable for the end user. And data. And I think that's a particular one I'm going to focus on a bit later in this talk, because I think the data and the evidence is something we've got to really hold front of mind, because everyone has an opinion. I've got an opinion as a regulator. Market participants and industry associations also have opinions, but we can't really have a constructive conversation unless we actually have data in front of us. And I think we need to bring more data, evidence and research to the table going forward. So look, we all understand whether we're a regulator or an industry association, herding the cats is a constant activity for all of us. As a regulator, we've got to try and keep all of the industry participants in check. As industry associations, we've got to try and keep our membership in check and make sure that they're following through with the culture, the ethos and the code that we wanted to stand for. And I think one thing that industry associations have got to do better if they want to be heading truly on a pathway to being professional is they've got to think hard and seriously about what are they going to do when a member doesn't deliver on their promise to a customer, whatever that promise might be, whether it's certification, whether it's strata management, whether it's architecture. What is the result? Because it's not good enough to say that that's just for me as the regulator. We have a responsibility as industry associations to also care about the performance of our members, to apply disciplinary procedures, to apply education, to make sure that we keep everyone in check. I think there's a lot of work that industry associations can do to relook at the processes in which they accept complaints and manage complaints. When I look through complaint forms, a classic issue is it's very challenging for a consumer or a member of the public or even an industry member to actually complete the form. We require them to have a very mature understanding of the regulatory environment which that association works with. And often we ask in our complaint handling forms for the complainee to identify the specific breach. I think that starts to push them a bit too far, because it should be on the industry association to take forward customer dissatisfaction and align up that dissatisfaction to the membership requirements of the association. Also need to make sure that there's a proper process when complaints come in so that they're reviewed properly, that we're taking them seriously, that there's some level of independence in their review. There's someone in charge of that process that is a little bit separate from the rest of the organisation. And then lastly, that we treat complaints not always as a disciplinary minded process, that they can be learning experiences. So I think a very powerful feature of organisations that do this well is that they publish desensitised versions of complaints so that all members can learn from the experience and do better next time. And this way we can make interactions to be much more powerful. Because what we've got to do collectively is to encourage more of our membership and our industries to head towards a corner of being a trustworthy status. So what does that mean? That means they're producing a service which more than likely is going to make customers happy. In the building context, it means buildings that aren't going to be seriously defective. That means occupation certificates being issued that can be relied upon. It means architects that produce designs which are compliant and highly detailed. And we've got to have a way in our markets of encouraging some movement of our members towards that sector of the market and start treating these members a little bit differently depending on which status they achieve. So starting at the trustworthy end of the market, as a regulator and association, I think we should be thinking about giving those people autonomy and privileges. For example, those members are going to be the ones that we do fewer audits with. And at the other end of the market, those that demonstrate high-risk behaviours, they're the ones which we're going to be doing more audits on. If we start responding to the stratification of risk with burdens and privileges, then we start to provide a powerful incentive for people to actually move up the chain and become more sophisticated, more mature, better and more productive performers. If we can do that, then that greater level of performance is something that can be recognised in the market. So it can be recognised by financiers and, as Tom has mentioned in his presentation, recognised by insurers. In building and construction, the baseline that we're working from is that for every dollar of a policy issued, insurers on average have been paying out around about $1.23. And so that's an unsustainable outcome. And so what we've got to do better collectively is to bring down that risk. And I'm pleased to report that in New South Wales, by having an approach that focuses on legislation and ratings and education, so all of these different streams coming together, that it seems to be making a difference. Because Tom in the ICA report, the latest statistics on professional indemnity insurance, which I know is a bugbear for all participants, particularly in the built environment, because it has gone up, that in New South Wales, the price of PI is now around a third less than other jurisdictions across Australia. So it really does show that if we can have a concerted effort to better manage risks, focus on the outcomes that matter to customers, then insurers can give us, as a sector, as an industry, some privileges and a really powerful one, PI pricing. So there was mention of managing the harms, and I think that's a very important concept to keep top of mind. In the built environment, we've thought about it firstly as managing the givens, because there's a lot of features of the market which are the way things are for structural reasons. And so rather than necessarily remove those features, it's about how you manage them. And when you think about what's the appropriate way to management, I would argue that what we want to achieve is absolute minimum damage to customers. While accepting it, it is a bit of a balancing act. I think we've got to think very closely through the lens of what would be the harm experienced by the most vulnerable person in the supply chain, and the context of the built environment, that would be the purchaser or homeowner. And so that's the way we've looked at all of the different structural harms, or as I would say, givens across the built environment. So off the plan purchases, there's been a lot of concern about off the plan purchases because people worry that you're committing as a purchaser or developer delivering you a certain product, and they may or may not deliver on that promise some 2 to 3 years later. Off the plan purchases are going to be a part of the building and construction environment for many years because our whole financing system is based upon that process. So we can't get rid of them. But what we can do is use the new legislation, the RAB Act, to make sure that developers absolutely deliver on their promise by auditing all the way up to the issue of that occupation certificate. SPV is another feature of building environment that people don't like because they fear that it could be used as a mechanism for phoenixing. Again, it's a structural issue that we're not going to resolve. So how do we manage it? We manage it by rating the trustworthiness of SPVs. And many of you might be aware that we now in New South Wales have the world's first rating product provided by a regulated ratings provider, Equifax, and it's already rating the developers and builders across New South Wales with around 70 in that process. Private certifiers is a classic one in the built environment where people like to throw spears. Private certification is here to stay. We need both a strong public and private certification system if we're going to keep up with development demand. So we manage that through strong legislation, the new Building and Development Certifiers Act. So my point to you is that it's not the harms that matters so much, but it's the controls, the processes that we have in place to manage that, and thinking about what's the residual on the most vulnerable sector or the most vulnerable person in that market. So I mentioned education before. I think this is a very powerful lever that we need to invest in and energise a lot more. So in New South Wales, we've been rolling out occupation certificate audits, which get to building sites in the construction phase, which is very new and something we haven't really done much in previous years. Now, instead of just issuing orders when things are wrong, we're now using an approach called yellow cards. And so these yellow cards are leveraging off sports, where yellow cards are sort of seen as a bit of a sin bin or course correction idea. In the context of education, we're issuing these yellow cards to help people learn how to do it better next time. So when we see an issue in the field, for example, poor waterproofing, poor design integration, a lack of awareness on the legislation, we use these yellow cards to send the practitioners off to an online learning management system where they'd go and do a short course of 1 to 2 hours, which gives them education in the specific problem that we noticed in the field. So we now have around 12 modules, and the feedback that we're getting from industry is that's a very powerful way to help course correct behaviour, because considering that most of our industry is small to medium businesses, while they might not like having a yellow card handed to them as a way to do training, they're starting to realise that having training that's of a good quality and relevant to problems is a benefit for each one of their practice groups. One thing I think that industry associations need to think about in the context of education is, are they truly delivering CPD which matches up with the shorthand? So is it C continual? We've got to make sure that education is relevant to the issues that our members are facing today. And so that means constant refreshing of the modules and the courses that we're producing. We've got to make sure it's the P, so that's professional. Much of the CPD that I see in the market is very old, it's dated, it's generally an old man standing in the corner delivering 2 hours of a presentation. We need to get up with the 21st century and make it far more engaging. We also need to make sure that it actually has clarity on the learning outcomes it wants to deliver and some level of assessment at the end. If it doesn't have that assessment, if there's not a test at the end, which is reasonably hard to pass, then it's really just informal CPD and you're not delivering that development, the D, at the end of the process. A bit like doing exercise or going to the gym, you've got to build up a bit of a sweat if you want to get something out of it on the other side. And so we're trying to set a new benchmark through our short courses that we're delivering both on our own and in partnership, delivering many courses with some of you on this meeting, to make sure that we collectively lift the bar of what CPD looks like, because it can be such a powerful force for good if we do it right. So data has been mentioned a few times. We as a regulator are using data and making it very much central to everything that we do, because without having the data, you don't know where you are today, and you don't know if the things that you're doing as a regulator or as an association are actually starting to make a difference. So here's the data we captured comparing the incidence of defects across key building elements from when we first, so for comparing a year into our audit process, and comparing those results to the incidence of defects in buildings before we started auditing. And so you can see by using this data that we could tell 1 year in that the incidence of defects in waterproofing fell by around 1/3. And that was a very pleasing result because we'd spent a lot of time communicating and trying to educate the market on waterproofing, particularly through learning modules and through a lot of industry and stakeholder education, so that we could see through this data that we should give ourselves a little pat on the back. We also saw, though, that for key services, which is defects around things such as lifts or switchboard rooms, that the incidence of defects had actually increased since we started doing audits. And so then we had to start thinking, well, why would that arise? And it was interesting for us to think through that defects in key services is not something which is easily observable by homeowners. So if we're comparing complaints data to audit data, there was going to be a gap because a homeowner is not necessarily aware that their electrical switch room is non-compliant. They're not necessarily aware that their car stacker is actually product that is not suitable to be used in Australia or doesn't meet a relevant international Australian standard. So it highlighted to us very clearly that complaints data isn't always the best gauge of actually the harms and the activities that are going on in the market. And that's why you need a system like audits, actually getting out in the field, getting out there with the industry and the practitioners to identify truly what's going on and get it down truthing. You've also got to use the data, think about what's coming ahead of us, and make sure that what we're doing today is actually having an impact. Many of the issues that we've seen in building construction have been that way for a long time. So as a regulator, as an industry, we've got to make sure that we're actually making a difference, bringing down the priority issues and staying on top of the new ones that arise. So an example of that is that while we might be getting on top of waterproofing, we now see emerging issues with electrical vehicle charging stations. And so we've got to continually be looking at the horizon to see what's coming over the fence. So I'd like to leave you with what I think a modern industry association should have in its toolkit, if I could use the building construction analogy. So I think first it needs processes to uplift capability and making sure that year on year, month on month, it's actually kicking the ball forward and taking its association, its profession, its membership to higher and higher levels of capability. Next, it needs a mirror. If you are familiar with the Hayne Review into Banking, it said that audits were like holding up a mirror to the industry. So industry associations need to have a board and a membership that is comfortable about being transparent and comfortable about being self-critical, because it's only after you look at yourself and your own strengths and weaknesses that you've got clarity on where you should be going forward. It's got to measure. It's got to be very clear about the data and evidence. So we've rolled out 5 research reports in the last 18 months to make sure that we had data on the sector. Industry associations themselves have got a big role to play in using the data that they can extract through member surveys and the like, so they can bring to the table with government and regulators clear data on the nature of the problem and therefore help drive clarity on the solution. It's got to educate and inform, and I think be conscious of doing that in a modern and digital setting. Have a strong focus on making key practitioner information like standards to do with practice and how you do work available to members, and also linking into relevant and engaging CPD, whether that's provided by their own association or other parties. Next, it's about continual improvement. So it's fantastic for those associations that have reached professional status, but that's never the end of the story. You've got to be thinking about what next, what can I improve on? And so similar to being self-critical, trying to always move the benchmark forward year on year. And then lastly, I think you've got to be an industry association that's highly engaged both with your members, but also with the regulator, because it's only by joining up all of those 3 components that we can collectively make sure that we continue to improve things for our industry and customers year on year. Thanks very much.
Thank you, Matt, and thank you for so cleverly bookending the panel presentations where Ian Summers commenced with talking about the results and the outcomes for consumers in terms of satisfaction or harms. You've brought the story all the way back to the consumer at the start and putting the consumer or the customer first in our thinking as regulators of professional standards. And you mentioned in your presentation getting ahead of problems, being proactive and using data, and that really picks up on what we know is a strength of professional standards regulation by occupational associations. They are in the field, they are close to their members, they are on the ground, able to see the problems coming at the profession rather than often statutory regulators who are much further back and often dealing with the problems of the past. So taking that proactive leaf out of your book, it really does speak to the strengths of professional associations being able to do that hard risk management work for the benefit of their members and the clients of their members. So thank you for that presentation. John Vines, who will share some closing remarks, thank our speakers and launch a piece of research from the councils. Over to you, John.
Thanks very much, Roxanne, and good morning, everyone. I have 2 tasks to perform in closing this panel session of the forum before we move into morning tea and followed by the workshop session. Firstly, I'd like to share some reflections on the discussion so far this morning, and secondly, I'd like to share a new report that will be published this month on the benefits of professional standards schemes. The reflections on the panel session, once again, we've had the benefit of an excellent panel session. The presentations by Ian Summers, Tony Lund and Matt Press were thought-provoking as well as enlightening. They shared with us some very practical ways in which we can work together in the national system for professional standards regulation to continually improve the quality of services to Australian consumers. Ian Summers outlined the scheme risk management requirements and the practical measures and metrics associated with schemes and the continuous improvement associated with those measures and metrics. Tom Lund from the ICA outlined the findings of the Trowbridge report and also provided us with insights into the work of the Business Advisory Council. And then Matt Press gave us a run through of the attributes of a modern industry association, particularly focusing on the needs to have a strong emphasis on the consumer. He also highlighted the importance of looking at complaints as providing a learning process, and in particular a strong focus on encouraging what he described as trustworthy behaviours. So those 3 presentations, I think, were great examples of the way in which professional standards can also improve the focus on the consumer. And what strikes me most is that all 3 presentations highlight the benefits that can flow from collaborative engagement between associations and insurers. There's no doubt that more and better data analysis can drive more and better risk management, improving professional standards and reducing the risk of professional negligence. The benefits flow to the professionals, their clients, industry, insurers, and the community at large. On that note, I call upon professional associations to seize the opportunity to engage with insurers, revitalising their risk management and seeking the benefits that schemes can deliver. To assist these efforts, I'm pleased to launch the Council's latest research report. Many of you will be familiar with the work of the councils, particularly in terms of our Strategy 2021. An important goal in our strategic direction was to develop an evidence base to demonstrate the effectiveness of professional standards regulation and promote the benefits of schemes. In June last year, we commissioned a report examining some of the benefits of the professional standards regime. And this is the first report in a series aimed at accumulating and assessing the evidence in support of professional standards regulations to help build towards better outcomes for Australian consumers and professions. The objectives of the Professional Standards Councils in commissioning this report was to examine information and data together with perceptions and experiences of key stakeholders on the operation of professional standards schemes and their effect. We envisage this report as the first in a series, and we anticipate our next report will focus on strategies that have demonstrably improved occupational standards and protected the consumers of the services provided by members of occupational associations. The report features 3 occupational association case studies: the Law Society of New South Wales, Chartered Accountants Australia and New Zealand, and the Australian Property Institute Valuers, to measure the availability and affordability and quality of professional indemnity insurance, and secondly, the number and size of notifications and claims. While measuring the effect of schemes is often a matter of correlation rather than causation, requiring recognition of a complex range of factors that affect how risk is regulated within a system of interacting and related parties, the benefits are nevertheless demonstrable. A body of research on regulatory effectiveness points to factors that can enable regulatory effectiveness, include ongoing monitoring, engagement, education, and feedback. And this report will provide the basis for further effort across the national system in these areas. The report suggests that there is a measurable support for scheme benefits. There are 3 key areas I wanted to highlight from the report. 1, favourable trends in claim frequency and average claim size, lower complaints, premium increases constrained, and improved availability of professional indemnity insurance are all linked to the successful operation of professional standards schemes. Being part of a professional standards scheme improves the member risk profile, which benefits professionals, their consumers, and insurers. 2, the value of independent oversight. While many associations are likely to engage in risk management in any event, it is the professional standards scheme that creates a legislative obligation supervised by the Council that has the benefit of invigorating the association's efforts and the quality of outcomes. The Council's supervision of the Association's risk management strategies and engagement in ongoing discussion and development of the Association's regulatory capacity supports their continuous improvement. And 3, the advantage of an active insurer and insured relationship. The report points to the factors that may support the achievement of better outcomes, such as the value to be gained from closer relationships between an association and its insurer. Associations can reap benefits for their members, consumers, their profession, and insurers alike when they actively engage with brokers, insurance companies, and underwriters to understand and respond to occupational risks. This is where I believe there is some room for improvement in actively engaging the insurance sector on the benefit of schemes. There is some further work to be done by the councils and associations in engaging with the insurance sector on the benefits of schemes to ensure professional standards schemes are recognised by insurers for their risk reduction and limitation of liability features. Insurers must be informed that they can be assured that a member of a professional standards scheme has the benefit of having access to effective risk management strategies, insurance standards, complaints and discipline systems with the regulatory oversight of the professional standards councils. With these findings in mind, the councils call upon occupational associations to meet with their insurers and discuss with them the benefits of schemes in optimising risk identification and developing strong risk management to help lift standards and better protect consumers. The benefits are tangible and significant. As risk decreases, so too do costs, complaints and consumer harms. Strong risk management helps protect consumers, enhance the reputation of professions, and address the availability, affordability, and quality of insurance products. Armed with the evidence in this report, we encourage associations and insurers to review their arrangements and seek improvements. The report will be published on the 14th of April 2022. It will be sent to all occupational associations in the National System of Professional Standards Regulation and will be available for download from the Council's website at psc.gov.au. So in conclusion, the councils congratulate and thank Taylor Fry Principal Kevin Gomes for his practical and valuable report and for the thoughtful and measured manner in which the assessment was conducted. The report includes case studies of the Law Society of New South Wales, Chartered Accountants of Australia and New Zealand, and Australian Property Institute valuers' experience with professional standards schemes. We thank them for their contribution to the report, enabling peers to learn from their participation in the national system. The engagement was overseen by the Professional Standards Authority's Manager Schemes, Darren Webster, and we thank him for his management of this important piece of work. I commend the benefits of professional standards schemes, limitation of liability and consumer protection measures to you. Thank you.
Thank you so much, John. And if I might add my appreciation to our speakers, to Ian, Matt and Tom,